Well, I'd say we're seeing a lot of profit taking that is continuing and has been going on. If you look at even in terms of the NSE 20 share index is actually flattening out. It's not gone up. It's just operating within the highs of about 4,060, 4,059. Now, with that, when you look at the stock in mind, there's an issue of a lot of profit taking. So most people have made, those who ended up buying of around in December 36 shillings to highs of almost 62 shillings are now making the most of it.
Kenol Kobil was among the top losers of the day. Have investors acted pretty fast to their dividend cut that's from 3 shillings and 50 cents to 3 shillings and 25 cents? Or what could be the cause behind the drop in price today to settle at 76 shillings and 50 cents? And what's your take on that counter going forward?
Well, we'll have to look at it from the point of view of the two types of investors. There's one who's in it for profit taking, and there's one that's the one who wants the dividends, and there's the one who's in it for the long term in terms of they look at the whole outlook of the company. Well, Kenol Kobil, we saw their numbers, what they posted. Yes, a lot of the operating expenses have gone down in terms of the net income, in terms of paying out interest on loans, which has gone down, but also the cost of doing business has actually gone down. But we also have to look at it in the context of, we all know that Shell may or may not be exiting from the market, and Kenol Kobil is in line to be one of the companies that may end up taking up the Shell outlets within the country, which would mean maybe all they're doing is that they're reducing in terms of paying out dividend to have enough in terms of bidding for the outlets that will be there. So they have enough in terms of their reserves, whereby when they are able to bid, they'll have sufficient funds to attain the same. And what will that translate to? If they manage to be the successful bidder, it means they'll have a wider, actually they'll end up being one of the largest in terms of retail outlets within the country. And having in mind also their approach in terms of investment in Rwanda and going all the way further down south, we would be looking at a different Kenol Kobil a few years down the road, 1 or 2 years. So it's also a question of weighing which of the two. So that could be one of the reasons why they've cut down in terms of payment of dividends.
Let's focus on the telecom sector with focus on Safaricom specifically. According to news reports today, they say Safaricom CEO has talked about price being the center of competition between the telcos when Bharti finally lands, and a projected reduction in market share is also in line for the mobile giant. Tell me, are we looking at less profits going forward, and what do you think investors are thinking at this point in time?
Well, I would say we have to look at Safaricom and understand that that's not the only in terms of their marketing strategy. It's just part of their marketing strategy. Cutting prices, you know, for the longest time, Michael Joseph used to talk about they're not going to compete on price. They'll compete on quality. They'll compete in terms of services offered and value addition. But when we look at the terms of Bharti and the likes, this is a company that is looking forward and raring to penetrate into the African market. And also going forward, you notice that the competition within the market is going to be very, 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 very intense. And the customer has become more savvy in terms of the products offered. So that would be one of the reasons behind them now looking at actually competing from the point of view of price. Yes, that will have a drastic effect in terms of if your market share is reduced, it will have a drastic effect in terms of your profits going forward. But we also have to look at the other lines of business. They still have pioneers, or they're still way ahead of the others in terms of data. They're still the only mobile company that is offering 3G, while the rest are still applying, and I mean they're still debating on the issue of the 3G license for it to be waived, then they can get on board. So we all also need to look at Safaricom from that point of view. I guess this is just realizing that so as not to have a lot of erosion of their market share as far as the voice is concerned, then they will compete from that point of view.
Now, the business papers today were filled with news about past struggles within housing finance. How do you expect this news to impact the share price of housing finance going forward, keeping in mind the robust housing sector that we have here in Kenya?
Well, we'd look at it from the point of view of look at who's the major shareholder, right? You look at the major shareholder in this instance, you look at the likes of Equity Bank, and you have British American Insurance, BRITAC, which are part and parcel of that package. So they're looking at, if we are the majority shareholders, we may as well want to have our own people on the board for decision-making purposes. And I think that would be one of the key things.